The adrenaline of April is behind us, but May 2026 is where the real trendsetting begins. We've seen the Fed hold the line, and we've seen gold defy gravity, but now, a historic leadership change at the Federal Reserve and a shadow supply in energy are forcing a total portfolio rethink. If you missed the April breakout, May is your window to catch the correction. Here is your strategic playbook. The biggest macro story this month is a regime change. On May 15th, Jerome Powell officially hands the gavel to Kevin Warsh. While Powell stays on the board to ensure stability, Warsh brings a more hawkish, market-skeptical DNA to the chair. Markets are on edge. Historically, a new Fed chair can trigger significant uncertainty drawdowns. We'll get our first taste of the new tone on May 20th with the FOMC minutes. If Warsh hints at accelerating quantitative tightening to trim the balance sheet, expect the US dollar to surge, putting immediate pressure on risk assets. Gold remains the anchor of the global market. After averaging over $5,000 in April, we are seeing a healthy consolidation. While some banks are projecting a rise toward $5,400 by year-end, don't be surprised by a short-term pullback in May as the Warsh dollar gains strength. The floor is firm at $4,750, supported by relentless central bank buying. This isn't a bubble, it's a structural shift. As long as the geopolitical climate remains tense, every dip toward that $4,750 level is being viewed as a long-term entry point. In equities, May is the month of truth for the real economy. On May 6th, Ørsted gives us the pulse of green energy. Can these massive projects stay profitable with rates held higher for longer? Then on May 13th, Unilever's AGM will reveal if consumer resilience is cracking. The era of easy price hikes is over. Investors are now rotating into companies that can grow through volume and efficiency. Watch the margins, they will separate the winners from the losers in this high-cost environment. Crypto is facing a psychological wall. Bitcoin is hugging the $80,000 mark, and the market is split. Some analysts warn of a bear flag that could see a flush back to $69,000, but the data shows institutional ETFs are still absorbing supply at a record pace. If we close a daily candle above $80,000, expect a violent short squeeze toward $85,000. Also, keep an eye on the tech. The migration from BRC-20 to runes is picking up steam. May is the month where the Bitcoin ecosystem gets more efficient. The biggest threat to your portfolio remains the Iranian wildcard. While the Strait of Hormuz remains a flashpoint, reports of a shadow fleet of tankers are ready to flood the market with supply. This is the only thing keeping WTI from exploding past $150. If this supply hits the market, oil prices could crater, sending a disinflation shock through the markets. If the blockade tightens, the $150 level becomes a reality, and the inflation trade is back with a vengeance. Position yourself for both extremes. May is not about the sprint, it's about the pivot. Watch the $80,000 level on Bitcoin, the $4,750 floor on gold, and the transition at the Fed on May 15th. Stay liquid, stay informed, and don't get caught on the wrong side of the new regime. Drop a comment, are you betting on the Warsh rally or the Warsh dip? See you in the next video.